Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is March 25th. Let's dive into the week's stock market news. European markets surge on central bank dovishness. European stock markets enjoyed a strong week, with a pan-European stocks Europe 600 index rising 1.03% to near record levels. Positive signals from central banks boosted investor confidence. Germany's DAX led gains with a 1.58% increase, while Italy's FTSE MIB climbed 1.30%. The UK's FTSE 100 surged an impressive 2.70%. Falling bond yields reflect dovish stance. Government bond yields across Europe decreased in response to weaker economic data from Germany and a Swiss interest rate cut. UK bond yields also fell after the Bank of England signalled a potential change in its stance on interest rates. Bank of England hints at possible rate cuts. The UK's central bank kept interest rates at 5.25% but hinted at possible future cuts. Two policymakers who usually favour higher rates shifted their stance. Governor Andrew Bailey, while cautious, signalled an increase in optimism about the economy, noting that rate cuts could be a future option. UK inflation eases, economy shows signs of growth. The Bank of England's policy announcement followed recent data indicating a decline in UK inflation to 3.4%. Meanwhile, the S&P Global Purchasing Managers Survey pointed to a possible end to the recession, with the composite PMI showing output expansion for a fifth straight month. Other central bank updates. The Swiss National Bank surprised markets with a quarter-point interest rate cut, while Norway's central bank kept its policy rate unchanged. Eurozone activity improves. Initial data from S&P Global suggested that Eurozone economic activity is stabilizing in March, with the composite PMI increasing to a 9-month high. Now our insight into alternative markets. Middle market private equity funds win the fundraising race in 2023. Private equity funds focused on the middle market had a seriously strong year in 2023. They pulled in a whopping $141.1 billion, marking their second-best fundraising haul ever. What's their secret? These funds consistently deliver better returns for investors compared to those mega funds. But here's the interesting part. Fewer middle market funds actually closed in 2023, which means those that did secure funding raised big money. The average fund size ballooned, with the median hitting $590 million, a significant jump from the year before. The key takeaway: middle market funds with a history of success were able to raise even more than last time. Over 92% of funds closed in 2023 were bigger than their previous versions, outpacing the broader pay industry. For example, Incline Equity Partners' new fund was a massive 63% larger than their last one. So, why the investor love? Middle market funds reliably generate better cash flow for their investors. In the first half of 2023, they returned way more capital than they asked for. Compare that to mega funds, where investors actually lost money during that same time. Another plus: it's simpler to sell mid-sized companies than those giants, protecting middle market funds when the exit market gets rocky. In fact, after a few slow quarters, exits for middle market companies picked up steam in late 2023. Of course, with a challenging year overall, exit values still weren't stellar. And something called continuation funds, where managers hold onto assets longer, became a popular alternative to traditional exits. In conclusion, middle market private equity funds have proven to be able to weather tough times, making them an attractive investment option in a stormy market.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, thubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.